Hey, it is Troy Stavros with Doorbell Real Estate, and it is time for our monthly market update. We are taking a look at all the data that is in through the end of August to see where we are in the market, how it compares to a year ago in August, as well as how it compares to the month prior and what currently is happening right now with the active inventory. All right, let's jump in and start taking a look. All right, let's start with the East Tennessee market as a whole. This is everything around the Knoxville area, all of the surrounding counties all lumped together as a whole. Looking at single-family homes, and we are looking at August 2023 and comparing it to August 2022. So home sales are down 18.5% compared to a year ago. The pending sales are down 7.5%. Inventory of homes is down 8.8% in all of East Tennessee. New listings are down 10.2%. The median sales price in East Tennessee is holding steady at $350,000. It was the same last month, so that's basically holding steady. But compared to a year ago, it is up 7.69%. So compared to August of last year, the median sales price is up 7.69% and coming in at $350,000. And the absorption rate is up to 2.35 months worth of inventory, up from 2.26. So we are seeing month over month inventory increase. Although we are down year over year, month over month, we are seeing more inventory come on the market, which is pretty normal for this time of year because as we head into the winter months, we usually see inventory increase. Let's take a look here at some of the graphs just to see how things are looking visually. If we look here at the number of listings, we can see that as of kind of April, things started trending up here. So it's been trending up, and has just continued to increase as we went through August. Again, that is typical for this time of year. When we look at listing prices, they have been going up since, I'd say February, and then started holding steady, pretty level here. Increased a little bit, and then over the last couple months have basically held steady as far as the median list price goes. As far as the median sold price, again, that has held steady as well. You can see we started increasing in April, went up in May, went up in June, and then it was basically at $349, $350, and $350. So the last 3 months, the median sale price has basically been right at the same number, right at $350,000. Again, the absorption rate is increasing, meaning we are seeing more inventory come on the market. Days on the market has been decreasing, as you can see this trend here, so it has been going down. And basically that's where we're at as far as all of East Tennessee. All right, let's take a look at Knoxville. So this is everything with a Knoxville, Tennessee address. So August of 2023, home sales are down 23.4% compared to a year ago. Pending sales are down 13.1%. Inventory of homes is down 16.9% compared to a year ago. New listings are down 15.1%. compared to a year ago. The median sales price is coming in at $390,000. That's up $10,000 from last month when it came in at $380,000. And as far as compared to a year ago, the median sales price is up 9.86% compared to August of 2022. So prices are still increasing, and that is because of our low inventory, which you can see in the absorption rate. It has increased month over month. We are at 1.3 months worth of inventory, where last month we were at 1.2. So we saw a little bit of an increase, but we are just over a month's worth of inventory when a healthy market has 6 months worth of inventory. So you can expect prices to remain high and actually continue to possibly increase because inventory is so low and we know that there is still demand for homes out there. While it has slowed down because of interest rates rising, there is still enough demand to be soaking up the little bit of inventory that we have. So that is keeping prices high. Let's take a quick look over. Wanted to show you what it looks like as far as the number of active listings and how that looks. So these are the active listings from 2018 until August of 2023. And I just want to show you that there is a seasonality as far as the number of properties that are on the market. And we typically see more inventory come on the market this time of year. So if we go back in 2018, you can see right here, this is August, September, October is the highest level of inventory. Then it starts going down. We go to the next month. Here we go. August, September, October, highest month of inventory, and then it starts decreasing. Obviously, 2020 was a little bit of an anomaly, but even right here, you can see September, October was the highest amount of inventory, and then it decreased. Go to 2021, or August, September, and then it started going down. 2022, here we are, August, September, and then inventory starts going down. So you can expect to have the most amount of inventory right around this September, October dates. And again, we're seeing it again this year. So we had lower inventory, and now it's coming up July, August, and we're into September, October. So we should start seeing a little bit more inventory come on the market. So that could be good if you're a buyer, but don't expect it to last very long because just like the seasonality shows, once it goes up, it will start coming down. Also, in regards to inventory, I wanted to show you another graph. So this shows 2023 inventory compared to 2022. And you can see the green line is 2022. It started out really low, and then it increased. And actually, they crossed lines here. So our current inventory, the black line, you can see is still significantly lower than where we were last year. And to give you an idea of what it looked like pre-pandemic, just to show you how little inventory we have, if I turn on 2019, which was before the pandemic, you can see what the inventory situation was like then. We had considerably more inventory on the market. And this right here, what you're seeing on the bottom, is why prices are so high. We have so little inventory, and we still have quite a bit of demand. All right, let's take a look at the counties. All right, these are the surrounding counties around East Tennessee. Let's take a look and see what they are doing. Oh, actually, I just want to go back 1 second and just show you that the average sold price per square foot in Knoxville, Tennessee, in August came in at $211 a square foot. Okay, and then we can keep that in mind when we look at the counties here as well. So we're looking at August 2023 compared to last year in the surrounding counties. So Roane County, available inventory is down 27% compared to a year ago. Pending sales are down 11.1%. And the median sales price in Roane County is up 26.09% and coming in at $302,500, with the median sold price per square foot in Roane County coming in at $172 a square foot. In Knox County, available inventory is down 17.1% compared to a year ago. Pending sales are down 11.7%, and the median sales price in Knox County is up 9.99% and coming in at $384,950. And the median price per square foot of a sold home in August in Knox County was $208 per square foot. In Anderson County, available inventory is down 16.4%. Pending sales are down 21.1%. The median sales price is down 9.43% and coming in at $248,500 in Anderson County, with the median sold price per square foot coming in at $194 per square foot. All right, Loudoun County. Available inventory in Loudoun County is down 13% compared to a year ago. Pending sales are down 11.1%, and the median sales price is up 12.46% and coming in at $505,495 in Loudoun County, with the median sold price per square foot coming in at $229 a square foot. In Sevier County, available inventory is up 7.63%. The pending sales are down 35.76%, so considerably down compared to a year ago. And the median sales price in Sevier County is up 11.65% and coming in at $559,500, with the median sold price per square foot in Sevier County being $327 per square foot in August. So yes, seeing a considerable downtrend in pending home sales in Sevier County, and that is a result of high interest rates. A lot of the home sales in Sevier County are procured by investors who come in and like to buy investment properties in the Gatlinburg, Pigeon Forge, Sevierville area, because it's a very high traffic tourist area. Obviously, the Smoky Mountains, the number one visited national park in the country, and Pigeon Forge, Gatlinburg being one of the top tourist attractions in the country. But interest rates are definitely slowing investors down from buying properties. So we can see that in the pending sales there, down over 35%. Blount County, available inventory is down 9.5%, and pending sales are down 20.6%. And the median sales price is up 4% and coming in at $390,000 in Blount County, with the median sold price per square foot coming in at $218 per square foot. Just going to show you, wanted to show you one more thing here as far as Knoxville. When we look, so that was looking at everything that happened basically in August. So let's take a quick peek and look and see what is happening in the Knoxville area currently with the current homes that are available on the market. Okay, this little graph right here is our market action index. You can think of that as a speedometer. So if the dial, if the hand is moving to the right, that means that the market is accelerating. If it's moving to the left, that means the market is decelerating. Well, a month ago, you can see we were a little further right, and the dial has moved a little bit to the left. So it means the market has started to decelerate a little bit, not uncommon for this time of year. But we are still definitely in a strong seller's market in Knoxville. If the number 30 here on this dial is kind of the break-even point between a buyer's market and a seller's market, so you can still see we are considerably into a seller's market. When we look over here on the right side, this is a 3-month graph of what is happening in all of these different areas. So if we look at the median list price, it's held pretty steady here. It hasn't really, it jumped up a little bit here, but over the 3-month period, it stayed pretty flat, with the median sales price here showing at $498 currently. The median price of new listings is also held pretty flat. So again, things have cooled over time, but it's staying pretty level. We aren't seeing things jump one way or another. Price per square foot, you can see over the last 3 months has trended down. At the beginning, 3 months ago, we were about $225. Now we're at about $210 per square foot for the active homes on the market. Median days on the market has started to trend up a little bit. It was flat, and then over the last week, we've seen it jump up a little bit to over a month, to about 35 days. Again, that's seasonal as well. We can see that happen. But here's an interesting one. Price decreases. You can see this has definitely trended up over the last 3 months, and is, as of last Friday, September 8th, was at 52%. So basically that's saying 52% of the homes that are currently on the market have had a price reduction. So that is telling you that the market is starting to soften a little bit, so people are going to have to decrease or reduce their prices. And we're seeing that with over half of the homes on the market having a price reduction. Inventory over the last 3 months, yeah, we can see that increase as well pretty consistently. But again, we said that's pretty typical for this time of year. Median rent jumped up and then has stayed pretty flat over the last couple months. And then the market action index has started to trend down, meaning the market has cooled over the last 3 months and is moving from an extreme strong seller's market to still a strong seller's market, but not as strong as it was 3 months ago. Okay, so that is what is happening in the current market now. Let's just take a look here and see a quick summary of what is happening in the market and in Knoxville in general. Things that buyers should know, things that sellers should know, so you can be educated on what is happening here now. So, in recent months, the Knoxville housing market has faced significant challenges. Home sales experienced a notable decline in July, primarily due to the sharp surge in mortgage rates since mid-May. These elevated borrowing costs, combined with ongoing economic uncertainty, have led many potential buyers to adopt a cautious approach. However, it's important to note that competition remains fierce for the limited inventory of homes available. As far as affordability goes, there are concerns. Housing affordability is a pressing concern for 67% of Knox County residents. According to a new poll that was released by the East Tennessee REALTORs, this issue is at the forefront of housing market dynamics. In January of 2022, an annual income of approximately $59,000 was sufficient to qualify for a mortgage on the median-priced home in East Tennessee. However, by August of 2023, last month, this figure has surged to over $110,000. So in January of 22, let me restate that. In January of 2022, you needed $59,000 to qualify for a mortgage on a median-priced home in East Tennessee. Last month, to qualify for a median-priced home in East Tennessee, you needed to make $110,000. So elevated interest rates and stable house prices mean that a significant portion of households are struggling to afford even lateral moves, let alone upgrades. So housing affordability is definitely a big concern here in Knoxville. And along with that, we have rising apartment rents. Apartment rents in Knoxville Metro increased by 6.06% in July compared to the previous year. That's significantly outpacing the national growth, which was just 0.78%. Projections indicate that rents in the area are expected to climb an additional 5% over the next 12 months. This further compounds the affordability challenge for residents looking for housing options. Let's talk about the resilience of the economy here in the Knoxville area. Despite various challenges, the East Tennessee economy has displayed remarkable resilience, even as monetary policy tightening exerts pressure on economic activity. In the second quarter of 2023, the Knoxville Metropolitan Statistical Area, or the MSA, saw an annualized real GDP growth rate of 4.1%. That's well above its long-term average of 2.8%. In comparison, the U.S. real GDP grew at a slower rate of 2.6%. While this robust growth is positive, it's important to note that annual GDP growth rate of 2 to 3% is considered typical. So our 4.1% is above typical. So obviously doing great. Inflation and interest rates. Let's talk about that. Although the Fed's preferred inflation measure, the Personal Consumption Expenditures, or the PCE index, peaked at 7% in June of 2022, it has since moderated to just over 3%. So they're doing a good job about reducing inflation. Core PCE inflation, which excludes food and energy prices, has moderated at a slower pace. So the Fed faces a dilemma. While some argue for a halt or even cuts in rate hikes due to a lagging monetary policy and its effects on the economy, current data suggests inflation remains above the Fed's 2% target rate. 2% is where they wanted to get inflation, and they've said that they're going to continue tightening things until we get to 2%. So we're at 3% now. They want to get to 2%. So this implies that interest rates are likely to stay elevated until early next year, impacting housing affordability yet again. There's a tight labor market. The Knoxville MSA's labor market remains exceptionally tight despite the Fed's rapid interest rate increases. The seasonally adjusted unemployment rate fell to just 3.01% in the second quarter, down from 3.15% the previous quarter and 3.05% year over year. This rate is significantly lower than the historical average of around 5%, indicating a fully recovered labor market. So the labor market is humming along nicely here in East Tennessee. Let's talk a little bit about the shifting demographics with people that have moved in to East Tennessee recently. So new research reveals a notable shift in income demographics, with higher income households moving into rural areas and other areas across the South, including Knox County. In 2021, Knox County added approximately $287.6 million in income from new residents, with an average annual income of little over $70,000 for newcomers. So again, let's just look at that. Before, your typical median income in Knoxville was around $56,000. Well, the new people that are moving into Knoxville are coming in with an annual average income of $70,000. So you have some high earners moving into the area. A lot of them coming from areas where they may have sold a house for significantly more, so they're willing to pay more for a home here, thus bringing prices up, thus keeping prices high, especially with a low inventory situation. So that is one of the things that we are looking at with that demographic shift. There's a demographic shift in income. Let's talk mortgage rates. Mortgage rates continued their upward trajectory in August, reaching levels not seen since 2001. The 30-year fixed mortgage rate averaged 7.23% for the week ending July 27th, compared to around 5.25% a year ago. So 2% higher in a year's span. Looking ahead, with the U.S. economy demonstrating strength and inflation persisting, mortgage rates are expected to hover between 6.5% to 7.5% for the remainder of the year. This means that affordability will remain a significant challenge for both prospective home buyers and sellers in the Knoxville area. And why do I say sellers and homeowners? Because most homeowners are not going to want to, unless they have to move, they aren't going to want to put their home on the market if they have a low interest rate, more than likely below 4%, some below 3%, to move and get a mortgage in the sevens. So that's why inventory is going to remain low. There is no sign that there's a big glut of inventory coming from anywhere. It's not going to come from homeowners who are locked into low interest rates. It's not going to come from foreclosures because they're at the lowest they've been in over a decade, simply because most homeowners have a lot of equity right now. So there would be no reason for them to foreclose. They could just sell their house, make some money, and walk away. So and new construction has slowed down simply because interest rates are high as well. So we don't see a big glut of inventory coming on the market that's going to change our low inventory situation. So we can expect prices to remain elevated. So in summary, the Knoxville housing market faces hurdles related to rising mortgage rates, housing affordability, and escalating rental costs. Despite these challenges, the regional economy remains resilient, driven by strong GDP growth and a tight labor market. Prospective homebuyers and sellers should be prepared for continued high competition and financial considerations in the coming months. All right, I hope this has been helpful. If you have any questions at all, don't hesitate to reach out to me. My team and I are here to serve you. We want to keep you educated so you can make great decisions. And please reach out with any questions. We look forward to talking to you. I hope you're having a great day. This is Troy Stavros with Doorbell Real Estate here in East Tennessee.